Moody's has downgraded the US debt, guys. How could they do this? Why don't they believe in the US Treasuries market? Well, I got news for you. I don't believe in the US Treasuries market either, and I think that this downgrade from Moody's was long overdue. In this video, we're going to get into what this downgrade means for the US Treasuries market, and we're also going to talk about how this downgrade is bullish for some other assets. So you're going to want to stick around. Before we do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. Last Friday, Moody's downgraded the US credit rating from AAA, the highest credit rating you could have as a country, to AA1. I think that's how you would say it, and that is the second highest credit rating you could have according to Moody's scale. I think that this downgrade was long overdue. When we look at the US fiscal situation, it's not looking pretty. We've seen the US debt continue to grow. We've seen the US continue to accumulate debt. And with that, I think that this decision from Moody's was kind of inevitable. There are three main credit rating agencies out there when it comes to governments and government debt. Those three credit rating agencies are Standard & Poor's, Fitch, and Moody's. And when we look at the other two, aside from Moody's, Standard & Poor's downgraded the U.S. debt in 2011, a long time ago when the U.S. had a lot less debt. They saw that the situation was getting worse and growing, so they downgraded to the second highest credit rating. And then we saw a couple of years ago in 2023, Fitch downgraded the U.S. debt also to the second highest credit rating, and now we have Moody's doing the same thing. Let's talk about why we got this downgrade from Moody's. I think the main and obvious reason is that the US debt just continues to grow, right? We have seen the national debt climb above $36 trillion and it's nearing $37 trillion. Let's go ahead and take a look at a chart of the US national debt. This chart shows the national debt from what looks like 1965 to present day. And as you can see in this chart, it continues to slope upward. In 2020, we got a huge increase in the national debt due to all that COVID spending. And really over the past 5 years, we've seen the national debt increase at a pretty alarming rate, and I think it's only going to increase faster and faster. We are almost halfway through 2025, and the US still has a good amount of debt that they need to issue this year. Let's go ahead and take a look at another visual here. This visual is from January, and it was posted by the Kobayashi letter, and it shows the amount of debt that needs to be refinanced by the US in 2025, and it's $9.2 trillion. That is a ton of debt that needs to be refinanced this year, and I'm wondering where the US is going to find buyers for this debt. I'm not sure how much of this debt they've already refinanced, but I know that they still have a good amount to go. I went ahead and asked X to give me a little estimate, or Grok to give me a little estimate for how much new debt the US needs to issue from today, May 20th, throughout the rest of the year, and it gave me an estimate of $6.2 trillion. That is a ton. This is how Grok broke it down. Grok said that the US is going to need to issue $811 billion in new debt for deficit financing because we're running these huge deficits, and the US is going to need to issue $5.38 trillion in new debt for debt refinancing, what I just showed you in that visual there. So that's just an estimate from Grok, but I know that the US still needs to issue trillions of dollars worth of debt this year, and with how bad the outlook is looking right now for the US debt market, especially after this downgrade, I wonder who they're going to find to buy this debt. One more thing I want to mention here is that we have this debt ceiling, which is basically supposed to be a cap on how much debt the US government can go into. And it looks like we are going to see the debt ceiling raised pretty soon here. The current debt ceiling is $36.1 trillion, and we are actually already over that, so I'm not exactly sure how how that works. I think that the debt ceiling is kind of stupid because the US government raises the debt ceiling every year. They raise it by trillions of dollars, and it's really not a ceiling if you're raising it every year, right? You don't raise the ceiling on your house every year. This is just kind of like this fictional thing that the government uses to kind of make people think that they care about the amount of debt that the US goes into. But really, this debt ceiling will just continue to get raised. And with all this additional debt that the US needs to issue this year, I wonder how much they're going to raise it by. I've been hearing figures around 40 trillion, but let's say the US raises the debt ceiling to 40 trillion, and then the US has to issue, $6 trillion more in debt this year. They're going to look dumb because then they're going to have to raise the debt ceiling again later this year, which is just going to be another negative catalyst for US debt. So I think that the debt ceiling is just kind of dumb at this point, but if they are going to continue using the debt ceiling, I think that they should raise it by more so they don't look dumb when they go above it in 5-6 months from now. The other two main reasons for why Moody's downgraded the US credit rating are pretty closely tied to the national debt. We can look at the widening fiscal deficit. So the US basically spends more than we bring in through tax receipts every year. Because we spend more than we make, we need to take out more debt to cover that difference. So the deficits continue to grow. I think the deficits are currently around $2 trillion. So with that, you can expect the national debt to grow by at least $2 trillion every year. And they just continue to grow with the national debt. We can also look at the growing interest expense, which is the real problem and the real reason why the US national debt problem isn't fixable. We have an interest expense of over $1 trillion now. I believe that the interest expense is more than defense spending. And this is a huge problem because it's an unproductive expense. The US can try to make more, become more productive, and bring in more in tax receipts. And they can try to cut spending, but it's really hard to get out of deficits, spending more than you make, when you're spending over $1 trillion on interest, and it's growing every year. So the interest contributes to the deficits, and the deficits contribute to the national debt, and we kind of just get into this debt spiral where it's really unfixable. And if you're interested in learning more about the debt spiral or reading a good article on it, you should check out The Informationist. It's by James Lavish. He's one of my favorite people in the Bitcoin space, and he breaks down this debt spiral really well and talks about how it's just going to get worse and worse. Now let's talk about how markets reacted to this downgrade. Obviously, this isn't great news for the US Treasuries market with the US debt being downgraded by Moody's, and we saw that reflected in the market on Monday with Treasury yields heading higher. If you're not really familiar with the Treasuries market and how yields work, when yields are heading higher, it means that there's less demand for treasuries. And because there's less demand, people are demanding a higher interest rate. If the interest rate goes higher, people may be more incentivized to buy that asset. If the yield is heading lower, that means that people are demanding US treasuries. And because there is more demand, it is pushing the interest rate lower. So with yields heading higher as of recent, it's not a good sign for the US government, and they are going to have to find a way to create some treasury demand here. Not sure how they're going to do it because it seems like people are just finding more and more reasons to leave the treasuries market, and that is good for gold. We saw gold up big on Monday. It was up around 1.4%, and gold continued to rise today on Tuesday. And this makes sense, right? If people can't hide in the treasuries market, if people don't think that US treasuries are a safe haven asset anymore, well, they're going to go into the other safe haven asset out there, and that is gold. And gold has been soaking up that demand some of that demand that would have probably gone into the treasuries market, but a lot of people are realizing that it's just not really a safe place to be. Bitcoin was up over the weekend. It hit 107K, and I think that this does have something to do with this downgrade and just a lack of trust in US treasuries. as people realize that US debt is probably not the best place to be, they're going to look for alternatives. And I think more and more people are starting to look at Bitcoin and say, hey, this has been a really good performing asset. It has similar properties to gold, and maybe I should get in on Bitcoin because it has a lot of upside. And one other thing I actually want to mention here is this week we've seen a lot of weakness in the Japanese bond market. Yields are spiking higher. And in Japan, people are moving into Metaplanet, a Bitcoin company, a company that has become known for aggressively borrowing and buying Bitcoin. People are moving into this stock as a play on Bitcoin to basically hide from all this weakness that they're seeing in the Treasuries market there. So we are starting to see people really treat Bitcoin as a hedge, as a safe haven asset, as a hedge against the traditional financial system and its problems. And I really like to see that. I want to wrap up this video by talking about where the US government is going to find demand for this US debt. I think it's going to be tough. The main theme of this video has been that US debt is not great, right? US Treasuries have been a failing investment. We are seeing the supply continue to grow, and I think this investment is only going to get worse and worse, and people are figuring that out. They're moving to other places. So with trillions of dollars worth of debt to be issued for the US in the remainder of this year, and more debt next year, more debt the year after that, I don't know where they're going to find people to buy this debt. So what do I think is going to happen? Who's going to buy the debt? I think that the Federal Reserve is going to buy the debt. And this is what we call quantitative easing. If the US government can't find enough people to buy this growing US debt, then the Federal Reserve has to come in and buy it. They have to buy the debt out of the market. They have to pick up for that lack of demand and put the debt on their balance sheet. When they do that, they have to create new monetary units, new money, and they push that new money out into the economy. This leads to the base money supply growing. It leads to the broad money supply growing, the amount of credit out there. And as the money supply grows, I think that people are going to move into Bitcoin and gold. I think that Bitcoin is going to be the main winner, but they're going to move into scarce assets, right? As the money supply grows, as the supply of US Treasuries continues to grow faster and faster, people are going to move into Bitcoin and gold because they have scarcity, a limited supply. And really, Bitcoin has the true limited supply. Gold has a very limited supply, but it still increases every year. So I think that these assets are set to really benefit from this weakness that we're seeing in US Treasuries. And I'm really looking forward to this quantitative easing as a Bitcoin holder because I think that Bitcoin is going to soak up that liquidity. US debt is in trouble. That is the main takeaway from this video. I'm glad I am not there. And I suggest, this is not financial advice, but for those who are maybe overinvested in the bond market, I just want them to think about what's happening with the bond market, the supply of these US Treasuries, and to look at where the supply is going. That's going to wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Really appreciate your support. Thanks for watching. I'll be back soon.